I've taken out 3 ACH loans and I'm struggling to make the repayments. Can you recommend a solution?
Yeah, I mean, that's a great question. We are finding a lot of people are going online these days. Uh, Many online lenders providing quick and easy solutions for their businesses. And in most cases, it's working well. But in some cases, like this guy, you can get behind. You take out one loan, you're making the repayments, but now you need more money. So you're going back to the well, getting another loan. We actually saw a deal recently that had 5 of these, and they had fallen behind. They were in a default rate, unfortunately, and things were getting pretty nasty. A lot of these online lenders, or all of them in fact, will take the money directly from your bank account. And if you miss a beat on that payment, you can get yourself into some real hot water real fast. And if you can, obviously refinance it. That's one solution. But again, there's other solutions out there that we can help you with. And oftentimes, factoring may be a great solution, but it may be a combination of things. Patrick, what are you seeing in this area?
Yeah, certainly. I mean, these MCA loans or merchant cash advance loans, as they're known, uh, are kind of restrictive. I mean, they're kind of the lender of last resort. They do take the money, like you said, Ian, directly from your bank account. They don't have a lot of requirements, is what's attractive to a lot of people, but they're very expensive, and it's very difficult to get them refinanced out once they're involved in your business. Especially if your sales have a hiccup in their cycle and you have a down month or something, things could get really nasty, as you mentioned. So what we typically try to do, sometimes people come to us with a factoring or a purchase order funding need, and they have these loans in place. What we typically do is like to term them out. In other words, find a term loan that has a monthly payment, more like a mortgage or a car payment, with a reasonable interest rate that is manageable and doesn't strap the company. Additionally, a lot of these term loan lenders can be subordinate to the factoring company. So the factoring company and purchase order company will handle the short-term working capital needs of the business, covering the cost of goods on the purchase order side and covering the other working capital needs on the account receivable advance. And then the term loan company will handle that long-term debt, because you really don't want to have long-term debt covering short-term needs. That's kind of finance 101. So they work really well together, and we solve a lot of people's cash problems that come to us with that scenario. It's quite common, unfortunately.
Yeah, I think that's a great creative solution, and it really solves the problem. You can keep having top-up loans, but they become a band-aid. They don't actually solve the problem. And obviously, as you know, with factoring, like you said, it's a revolving line of credit on your receivables. You don't have a repayment to make. The funds are repaid through the payments from your customers. So it's not like a deadline or an amount that you've got to pay this Friday and you're sweating about how you're going to meet that obligation. It's a line of credit. And like you said, if you can provide a solution on more traditional terms, a monthly payment, to get rid of those weekly or sometimes daily ACH MCA loans at a lower rate as well, then I think that's a great solution.